So we will be starting a new module in economy, monetary system in India. A very important module. Every year there will be questions from this particular module. Okay, so here we will be talk about what is money, what are the different types of money. We will also talk about different M1, M2, M3, M4, all these concepts, narrow money, broad money, everything will be covered. We'll talk about Reserve Bank of India, the different monetary policies of Reserve Bank of India, contractionary policy, expansionary policy, all these things will be covered in this module. So I'll be taking around 4 or 5 sessions, and with that we'll complete this module. Okay, so let's start with this session. What do you mean by money? Anything can be money if it is having a general acceptability as a means of payment. So if you can make a payment, it is not necessarily currency or coins. Okay, so anything which is having general acceptability can be understood as money. So but it should be as a means of payment, right? Now here what we're going to see first is I'll tell some functions of money, then we'll look into the barter system, and then we'll talk about different types of money. Okay, the evolution of money we will discuss, and then we will move to M1, M2, M3, M3, all these concepts. Okay, so what are the functions of money? So firstly, it is a medium of exchange, right? So medium of exchange. All the commodities are accepted or exchanged on the basis of money, which is having a general purchasing power. So money is having some purchasing power, so it can be considered as medium of exchange. Second function, common measure of values, right? Common measure of value or basic unit of account. See, in the previous system, when we talk about barter system, what was the problem? In barter system, there should be double coincidence of needs, right? Before money, there was a barter system. So that was also a kind of money only because you're exchanging something, okay, and buying something. So that exchanging item also have purchasing power, and the transaction is also happening. You can consider it as a money, but that system is barter system, right? You're exchanging something and you're getting some other thing, but what is more important there is double coincidence of need is required. Sometimes you may need food, okay, and what you have will be you may be a carpenter, you will have a chair, okay. So if you need to get food, the other person, the farmer, should also be in need of the chair. If the farmer is not in the need of chair, he may not give you the food, right? So double coincidence of need is required. Secondly, when it comes to barter system, the valuation is also a problem. So here you can see common measure of value if money is there. Otherwise, how valuation will be a problem? I may tell for this particular pen, I need to get 10 chairs. If you're a carpenter and you're in need of this pen, or you're in need of some rice, okay, I'll tell that for 1 kilogram of rice, I need 10 chairs. Some other person will tell that 1 kilogram of rice, I need 100 chairs, okay, or some other person will tell that 100 table or 100 television. Like this, there is no common measure, but when money is there, there is a common measure for values. The table costs this much, the chair costs this much, the pen costs this much, and the food costs this much. Everything can be understood on the basis of a common platform. Okay, so money serves as a common measure. That is one of the most important function of money apart from medium of exchange. The next function is actually standard for deferred payments. Okay, it is a standard for deferred payments. The future monetary obligations can be or could be settled in terms of money. So money acts as a standard for deferred payments. And finally, store of wealth. Store of wealth. So money is actually an asset. Now we will see types of money. Okay, so we'll discuss different types of money, and here we will discuss the evolution of money also. So we started off with barter system, that is a commodity to commodity exchange system, and then we have discussed about the problems with respect to that. That is the double coincidence of need is one problem, and secondly, valuation is another problem. Okay, now here we are going to discuss about different other types of money, starting from full bodied money. The first one is full bodied money. See, full-bodied money, for example, gold coin. Actually, the value of money in this case will be equal to the value of that commodity. Okay, so for example, gold coin. So this, let's suppose there's a gold coin, and if it is printed that, let's say 100 or 1000, the the gold is worth 1,000 rupees. Okay, that is what you mean by full bodied money, because initially people didn't have trust in the governments and the kings. Okay, all the setup. So you need to have the value of commodity as the money. Okay, so let me write here. It is a money whose value as money is equivalent to its value as a commodity. Now, one thing that you need to understand here is the value of money here is equivalent to the value of commodity. So what do you mean by value of money here? Money, the value of money means this, what is printed in this, that is the face value. Okay, so the face value is what we call as the value of money. Value as commodity means what? The metal for which this is used. Okay, the metal which is used here, the value of the metal is what you mean by value of the commodity. Okay, so that is what full bodied money. Next one is token money. Token money, or it is also known as paper money. Paper money, or also known as credit money. Okay, so first we have seen commodity to commodity exchange, that is a barter system. We have seen the problems. Then full bodied money, where the money value is actually equal to the value as commodity, and value as commodity means it is a metal in which the money, the face value is printed, and the money value means the face value which is printed on the metal. Now the token money or paper money or the credit money. So you can see here paper money or credit money. From here you can understand its value as money will be much more than the commodity which is used to print the money, right? Maybe the piece of paper is used, but you can see 500 rupee or 100 rupee or 1000 rupee will be printed on the paper. For example, the currencies. Okay, so all these are examples of token money. That means value as a commodity which is much lesser than the face value or value as money. Value as money will be much more. So here you can see value of money is equal to value of the commodity. That means both are same. The gold coin is an example. So here there will be a paper currency which is issued by RBI. Let's say RBI is issuing rupee 100. This paper piece might cost 50 paisa or 1 rupee, but the value as money will be 100. So value as money will be much more than the commodity. Value as a commodity. So let me write one sentence here. Value as money is much more than value as commodity. So I hope you understood what I mean by value as money. Value as money means this face value. Value as commodity means the paper in which it is printed. So here also value as money means this face value. Value of commodity means the metal in which it is printed. Okay, now the next one. And now why it is known as credit money? Because it is a liability to RBI. When you have this 100 rupee note, RBI is supposed to give you 100 rupee anytime, the value of 100 rupee anytime, right? So it is a liability to government, so it is a credit money. Okay, so for example, paper note, currency, etc. Now next one is representative full bodied money. Representative full bodied money. So here you can see it is equivalent to full bodied money in one sense. Okay, and it may be similar to token money in the other sense. So it is actually a combination of the first and second one. So here let's suppose it's similar to token money in the sense that it is let's suppose RBI is issuing rupee 100. Okay, so this is a piece of paper which is issued by RBI. Its money value as money is 100, but this commodity is less than money value, much less than money value. But to issue this kind of money, that is a representative full bodied money, the equivalent amount of gold has to be kept with RBI. Okay, the central bank. That is what I mean by representative full bodied money. So it is actually representing the amount of gold actually with RBI. Okay, so why it is similar to second one, that is token money? Because it is a piece of paper in which it is printed, and the value as money is much more than value as commodity. Why it is similar to the first one, full bodied money? Because gold is actually kept with the RBI. Okay, so that is what you mean by representative full bodied money. So let me write here. It is a type of money which is issued which is issued against the backing of equivalent value of bullion. Bullion means gold. I mean here bullion, gold or silver, with the issuing authority. So here I am talking about the central bank of the country, okay, RBI. Now the next one is convertible money. So convertible money means the money which can be converted into gold or silver at any point of time with the issuing authority. So if you give this money, let's say 100 rupees with you, you go and give it to RBI, you should be getting equivalent amount of gold or silver. That is what you mean by convertible money. We are no more convertible, okay, so we cannot convert money. And if you remember in one of our previous discussions, when we discussed about IMF, initially from during 1940s, from 40s onwards, we were following Bretton Woods exchange rate system. See, if you remember, till 91 we followed a fixed exchange rate system. Okay, so till 91 fixed system is what we followed, and then 92 we have followed LERMs. That means partly fixed and partly, market decided, or flexible or floating. And from 93 onwards we are going for floating exchange rate system. But our floating exchange rate system is actually managed float. That means RBI can interfere in the market. RBI can create supply, or RBI can create demand also. So RBI can interfere positively to control appreciation of or depreciation of rupee. So we call it as managed float, okay, or it is also known as dirty float, because the central bank can interfere and it is not purely floating. Okay, before that, Bretton Woods system is what everybody was following, the members of IMF. That is, every country's currency is connected with dollar, and dollar is actually linked with gold. That means it is freely convertible to gold. But in 1970s, US changed the policy, that they have announced that no more dollar is convertible with gold. Then this system break, and different countries followed different exchange rate system, and we followed fixed exchange rate systems. Okay, so that discussion anyway we have already done. So here convertible means it must be convertible in terms of gold or silver. So it can be converted, let me write down here. It can be converted into gold or silver with the issuing authority. Now fifth one will be opposite of this, that is inconvertible money. Okay, so inconvertible money means you will not be able to convert money in terms of bullion. You won't get dollar, or you won't get gold or silver. Okay, you cannot convert the money that you have, and rupee is inconvertible now. And most of the countries nowadays is following this policy, and most of the countries following token money. So this is what most of the countries following. Even RBI is also following token money. It is not the case that you need to keep complete amount of gold or equivalent amount of gold with RBI to print the currency. If that is the case, deficit financing and all will not happen, right? We have discussed a lot about deficit financing and all in the previous sessions, so I'm not talking about that here. But the problem with deficit financing also we have discussed, right? It actually transfers resources from private sector to public sector only. It is not creating any assets, and that is the reason why deficit financing is not desirable. It also creates inflation in the system. So we are inconvertible now. That means rupee is not convertible. Also, we have token money. Token money means RBI don't want to keep exactly same amount of gold with RBI when you are printing currency. You just need to keep 200 kilogram of gold, and you can print unlimited, currency. Okay, unlimited money you can print. So token money, the advantage is that. So inconvertible money, it cannot be converted into bullion with the issuing authority. So rupee is not convertible now. Okay, now if you see evolution of money, how this evolution of money will be like this. So first, as I have discussed, there will be a barter system, that is a commodity to commodity exchange. Okay, So commodity to commodity exchange system, that is a barter system. And then it came the full bodied money. So then full bodied money. So why initially full bodied money? Why not token money? If you ask me, it is because people didn't have trust in the king. Anytime wars are there, anytime the governments, anytime the system is changing, so people didn't have trust, so they want to keep the money in terms of commodity. That means equivalent amount of gold has to be issued, because the people's trust was not there, the stability was not there in the government. So let's say this is so as I have discussed, this is what followed, right? Equivalent amount of face value and value as commodity should be equal. And then what happened? Slowly king started reducing the size. Okay, so initially let's suppose this is rupee 100. Okay, so this much gold is used. Then they started using a small size coins, okay, so that you can save some gold. People's trust started growing slowly, so you started reducing the size of the coin, but still people had not complete trust on the government. So what people do now, you have two different types of coins. This is having more gold and this is having less gold, and this is having, and both are having equivalent face value, or value as money is equal in both cases, but value as commodity will be more in case of the larger coin. So you can use your common sense, which money will be in circulation now. You will try to circulate the smaller coins, right? Because value as commodity will be anyway less, but money value is same. So this is actually known as bad money, because value as money is less than the value as commodity. This is known as good money. So what will happen? There is a law called as Gresham's law. Okay, so what is Gresham's law? Gresham's law states that the bad money drives out good money from the circulation. Okay, so bad money drives out good money from circulation. So I hope you understood the reason. You have both coins with you, 500 larger coin, 500 smaller coin. 500 smaller coin having a less value as commodity compared to 500 larger coin, both having equal face value, or value as money same in both cases. So you will be spending, or you will be circulating this only, and you will be keeping this as your asset. So in circulation, which will be there? In circulation, the small money will be there, that is a bad money. So from circulation, bad money drives out good money. Good money you will keep with yourself. So first commodity to commodity exchange, then full bodied money, then reduce the size. Then what will be the next step in this evolution process? Representative full bodied money. Okay, representative full bodied money. You keep equivalent amount with the issuing authority in terms of bullion, and you issue the currency, and it should be convertible any point of time. And then comes token money. Okay, so then token money. So this is how the evolution of money you can understand. First commodity to commodity exchange, that is a barter system. Then comes full bodied money, then reduce the size. It's similar to full bodied money, but reduce the size, but value as commodity will be slightly lesser than value of money, and value as money. And then representative full bodied money, the commodity will be, the value as commodity will be much lesser than value as money, but equivalent amount of bullion will be with the issuing authority. Then token money, in which equivalent amount is not required. You need to keep some token amount, okay, token amount in terms of bullion with the issuing authority, and you can print unlimited amount of currency. So that is how the evolution of money. Now other type of money also we will quickly look into. Next is fiat money. Okay, so the sixth one, fiat money. So it actually serves as money because of the order of government. But one thing that we need to know is the government sanction or the government order is not necessary for something to serve as money. If I'm ready to exchange something for something else, okay, mutual coincidence of want is what required, that we have seen in case of barter system or the commodity to commodity exchange rate, and the government sanction is not required in that case. Anything can act as money. It is just a medium of exchange. Okay, but fiat money is the money which serves as money because of the sanction or the order of the government. So it serves as money. It serves as money on the order. And that's why it is known as fiat. Order is fiat, right? Fiat of the government. See, if you take the case of Bitcoin, there is no sanction from the government, but it serves as money, right? So government sanction is not required. It is just the mutual acceptance is what required. If you're ready to exchange something for something else, if it can act as a medium of exchange, that is money. Government sanction is not required. That's why explicitly we need to talk about fiat money. Seventh, legal tender money. Legal tender money. So legal tender money, it is actually compulsory to accept for any monetary obligation. So somebody, you are purchasing something, or somebody, some payment you have to make in rupee. You can make it in terms of rupee. Nobody can stop you making it in terms of rupee, right? So if you buy something and if you pay it in terms of rupee, the other person compulsorily should accept that. Okay, so it is compulsory to accept for settlement of monetary obligations. Now there are two types of legal tender money. Limited legal tender money. The first one, limited legal tender money. That means it is compulsory to accept that money up to a particular limit. For example, 50 paisa coin, you need to accept up to the payment of 10 rupee. Okay, so for example, 50 paisa you will have to accept till 10 rupee worth payments. Then unlimited legal tender money. So it is for unlimited payments. Okay, so from 1 rupee and above, you can make it for making unlimited amount of payments. Next is non-legal tender money. Non-legal tender money, or it is also known as, optional money. You cannot call it as illegal. It is optional money. So optional money, non-legal tender money means it is opposite of legal tender money. It is not compulsory to accept. Okay, not compulsory to accept, right? Some tokens which you get in some areas, you go to some shops or some parks, you get some tokens, or Nepalese currencies in the borders. All these are examples of non-legal tender money. There is no compulsion that you need to accept this as money. Bitcoin, okay, so cryptocurrencies are all example for this. Next is fiduciary money. So it actually serves as money on the basis of people's trust. Okay, the personal trust is important. So serves as money on the basis of personal trust. Okay, so if you have any doubt, what is non-legal tender money? It is not just, I am saying it is not compulsory, like in terms of when you are making payments in terms of rupee, it is compulsory to accept. But here some vouchers you get, when you are doing some shopping, you get some vouchers. It is not necessary that some other person have to accept that voucher, right? But when you talk about check and all, that is different. That is near money. We'll come to that. After this, I'll be discussing about near money. Okay, now if you see here 6 and 7, both are almost same. Fiat money, it serves as money on the order of the government or the sanction of government. Legal tender money also the same. You need to compulsorily accept it, okay, to any monetary obligation. But which one is more broader? This is more broader. 7th, legal tender money is more broader because government is saying you have to compulsorily accept it as a payment of settlement of monetary obligation. So next we'll go for near money. So it is actually near money means the most liquid assets. Okay, so highly liquid financial assets. As I have just before told you, check is an example. Shares, okay, bonds, draft, etc. So what do you mean by liquidity? Liquidity means the ease of convertibility in terms of rupee, okay, into money. So you can easily convert into money. That is what you mean by liquid. So these items are most liquid. You give a check to in the bank, you'll get the money. Shares, bonds, etc. You can sell anytime. Okay, so it is most liquid financial assets. Gold is also liquid. I'm not talking about gold because I'm talking about financial assets. Okay, so next we will go for plastic money. Plastic money means all these debit cards, credit cards, etc. It is not that the money which is printed in a plastic. Okay, so debit, credit cards, etc. Next is deposit money. Deposit money is the money which is invested or deposited in the banks or financial institution. It is also known as secondary money. Secondary money. So the money invested or deposited in banks or FIs. Money deposited in banks or financial institutions. So we talked about all the different types of money. We started off with functions of money. Okay, so I've told you already: functions, medium of exchange, common measure of value, standard for deferred payment, store of wealth, and full-bodied money means equivalent. The value as money will be equal to value as commodity. So that is the first one. Token money, value as money will be more than value as commodity. Representative full-bodied money, okay, value as money will be much more than value as commodity, but equivalent amount of bullion has to be kept with the issuing authority. Convertible money, you can convert it with bullion anytime. Inconvertible, you cannot convert. And then we have discussed about evolution of money. We have started off with barter system, that is a commodity to commodity exchange, and then we moved on to full-bodied money because people didn't had enough trust on the issuing authorities. And then King started reducing the size, and then what happens is the Gresham's law we have discussed. The bad money drives out full money because the good money is having much more value as a commodity. And then we have seen after that representative full-bodied money, keeping equivalent amount of gold with issuing authority, and finally token money, when the people's trust is actually improved on the financial institutions. We have also talked about fiat money. It serves as money on the order of the government. Legal tender money, it must be accepted as the method for payment for all the monetary obligations. And limited legal tender money, up to certain limit it is compulsory to accept. Unlimited means any there is no limit, you need to accept this money as any monetary obligations. Okay, up from 1 rupee onwards it is unlimited. Non-legal tender money, it is optional money. It is not compulsory to accept, as I've discussed. Vouchers, bitcoins, all these are examples. Then fiduciary money serves as money on the basis of personal trust. Near money, highly liquid financial assets, check, draft, all these are examples. Financial assets is what I'm talking about. Plastic money, ATM cards, okay, debit cards, credit cards, etc. Deposit money, the money deposited in the bank accounts and financial institutions. Okay, so it is also known as secondary money. So that's about different types of money. Next session we'll talk about different types of accounts, bank accounts, okay, and then we'll also talk about post office accounts, and then we'll move on to different concepts of money, M1, M2, M3. All those things we'll discuss, which is very important for your prelims. So if you have any doubt, you can get in touch with me here. This is my Instagram ID. You can join the Telegram channel for all the videos. So see you guys.